Hey everyone, and welcome to the third episode of the interview series. And today we have with us Alex Avery, who is a managing director of institutional equities research at CIBC World Markets, and he's also the author of the book The Wealthy Renter: How to Choose Housing That Will Make You Rich. So thank you for being here today, Alex. And is there anything that you would like to let the audience know about yourself that I potentially missed out?
No, I mean, I think you captured it all. Mostly, I would note that the book is a personal venture, not an activity that I undertook as part of my day job. But yeah, it's something I'm passionate about, and as a result of my day job, I basically study, investments in real estate and make recommendations. And so, through the course of the last 15 years focused on that, I've come to have a lot of opinions about housing and real estate investment in general.
Okay. And how did you come up with the idea behind the book, or why did you decide to write the book?
Yeah, it wasn't really, I would say, an active decision. I started at CIBC about a dozen years ago, and I found that, at cocktail parties, on the subway, and, wherever you run into people that you're meeting for the first time, you often say, "Oh, what do you do?" And I would say, I work at a bank, and that usually kind of ended the conversation. But if someone asked the follow-up question, "What do you do there?" I would say, "I'm a real estate analyst." And the next question logically is, "Oh, is it a good time to buy a house?" And so I, had to explain that that's not what I do, but that, we could talk about that because I had a lot of opinions. And so I ended up having thousands of conversations with all walks of lives of Canadians, and I found that there were very consistent misconceptions amongst the general population about what home ownership is about and what housing represents as an investment. And so probably I guess about a dozen years ago, I started to notice having these same conversations over and over again. And so I started writing them down. And then about 5 or 6 years ago, I found that I'd accumulated about 25,000 or 30,000 words. And I think at some point in that interim period, I thought, like, oh, wouldn't this be funny if this turned into something I could write a book about? But it was about 3 or 4 years ago that I thought, maybe I should actually turn this into a book. And I got close to publishing it 2 or 3 years ago, and then ultimately got it published last September. And it's been a very interesting experience, and certainly the timing couldn't have been better given what's happening in Canada's housing markets.
Yeah, absolutely. And for sure, how did you get interested in real estate?
I always found it to be an interesting topic. I mean, I've always been very interested and passionate about investments. And my father, being in real estate, was also both interested in real estate, but also interested in investments. And so I think it just came naturally to me. And I think real estate as an investment is a beautifully simple investment, particularly when it's not your house. But understanding what drives real estate is very intuitive to me. Understanding the math of real estate. I mean, you think about all the different industries that are out there where, you can classify the people as rocket scientists. Real estate is not one of those sectors. The business itself is quite straightforward. It does get very interesting when you get into the strategy, but the simple elements of real estate allow you to understand the industry very quickly, but then sort of graduate to the more sophisticated and interesting strategy pieces very quickly.
I love that you took your passion and you went with it, so that's great. And so your book basically talks about why buying may not necessarily be the best choice financially. And so when you, I guess, I'm assuming you also tell people who ask you sort of somewhat the same question, oh, should I buy? And I'm guessing that you also say, oh, it's better to rent. Now, what are the reactions that you get when you tell them that? Because in North America, it's often, there's the idea behind, oh, you have to buy your home You're only renting is throwing away your money. So there's a lot of notions behind, oh, you have to buy your own home. So what are the reactions that you get when you give them your answer?
Yeah, it's interesting. I mean, there's a very wide cross section of people that you come across, but the most popular response I would say is that it's sort of blasphemy to say that homeownership is not is not the best choice, and it's not the best choice for everyone. But that's really what the purpose that the reason that I wrote the book was really to tell the other side of the housing story, because home ownership is so incredibly broadly promoted, and it's so absolutely believed in by the people who promote it that you're only ever hearing one side of the story. There is no one out there saying, rental is such a great way to live, and it's a great way to accumulate wealth, and you should consider it because there are other options to home ownership. The advice that you get is always the same, and it's always absolute, and that is everyone should buy a home. And that can't possibly be the right answer for everyone. So when people ask me what they should do, I generally don't say you should rent. I don't say you should buy. I say, there's a lot of different factors to consider. Be careful about the advice that you're getting, because the advice is incredibly biased. Try and understand why it is all of the different people who are telling you to buy a home are telling you that you should buy a home. Lenders or the government or your parents or your friends or your neighbors or your coworkers. I mean, everyone generally tells you the same thing. I think the biggest piece of advice, and the one that I'm most passionate about when it comes to this topic, is that people should get educated about housing, understand what your choices are, understand what the implications of those choices are, and really just understand more about housing, because it's literally the biggest investment that most Canadians and most people in the world ever end up making, and it's not something that you should go into feeling pressured, having all one-sided advice, not having an appreciation for what drives the housing market or where you are in the housing cycle. I mean, there's all sorts of things to know about housing, and people generally know more about their cell phone plans than they do about housing options.
Yeah, that's a very good point. Your book is actually the only book that I've read on why you should rent versus buy. I mean, there are other people out there who advocate that sort of same logic. There's this one famous entrepreneur or real estate investor, Grant Cardone. He talks about how it's not a good idea to buy a house. He says it's not an investment per se. There's Robert Kiyosaki who also says the same thing about your house isn't necessarily an asset, or you shouldn't look at it as an asset because it's a cash outflow versus a cash inflow. I mean, to them, assets are income producing, but so I guess that's very interesting that you also say that. And for yourself, your book is directed mainly towards Canadians. Now, would you say that this is the same situation for to not rent to rent is better than to buy to other people, to maybe Americans or people in Asia or Latin America, Europe? I'm not sure if you're able to comment on that, but what are your thoughts?
Yeah, no, I mean, as a part of my job, I end up looking at real estate markets all around the world, and I would say, the advice is the same regardless of where you go in the world, and that is that housing is a lot like prescription medicine. There is no one prescription for everyone, and even for an individual, at some points in your life, it might make more sense to be a renter, and at other points in your life, it might make more sense to be an owner. And then, outside of what your own needs are, there's good times to buy into a housing market, not so good times to buy into a housing market. But there are a lot of very common elements to the housing market across almost all, major developed countries in the world. And one of them is that governments really love to promote home ownership. So it's tough not to listen when the government, who is of the people for the people, is telling you to do something and then offering you huge incentives. I mean, in Canada, you can take money out of your RRSP. You've got CMHC, which will basically offer you their credit, which lowers your interest dramatically. You can get a rebate on your land transfer tax the first time. The only asset that you can buy and then sell for a whole lot more later without paying capital gains tax is your house. I mean, those are all really, really promotional elements to the Canadian housing market, but they also exist in other places in the world. If you look at the US, they've got Fannie Mae and Freddie Mac and all sorts of other organizations, dedicated to facilitating people who want to buy their own home. You've got mortgage interest deductibility in the U.S. There's also a capital gains exemption, limited amount in the U.S. But there are, every country that I researched in the course of doing this basically had a pro home ownership stance, and the reasons for that are good. I don't think they're ill-willed. Generally speaking, a home-owning society is a good society because people who own their homes, they tend to go to work more often, they're more productive, they're more reliable. Usually that's because they've got a big mortgage, and if they don't make the payment, then they get into trouble. But they're also generally more law-abiding. If you have something really, really precious to you that you spent a ton of money on, you're really passionate about it, and you really enjoy it, you're not going to mess with someone else's same thing because you don't want them messing with your thing. So it does tend to, I guess if you were to look at it from a negative perspective, it's almost like a form of population control, but it's I would think of it more as like an incentive structure, and so it promotes the right kinds of behavior that make it easier for governments to create a society where people can function and live happy lives. So I think there are lots of really positive things about home ownership, and some of the less positive ones from a political perspective would be that politicians often undertake housing policy that leads to house prices going higher and more homeowners moving into the home ownership side of things, because they tend to get reelected when things are going well for the constituents. People don't like to change courses when they're winning the race. Whereas when things aren't going well, there's this great incentive to try and again promote home ownership. So that's it's common all around the world, but in Canada, I think today it's a particularly interesting time with record house prices on an average for the whole country, but really most acutely interesting in Toronto and Vancouver, where house prices have just been very exciting.
Yeah. Speaking of the Canadian market, what are your thoughts on the housing situation in Canada currently?
Yeah, I mean, so in the book, which I've got here, we went through each of the big six markets, so Toronto, Vancouver, Calgary, Edmonton, Ottawa, and Montreal. Looked at all of the different elements of the housing market, talked about what drives house prices, but also the characteristics of those markets. Are they markets that, will consistently be affordable? Are they going to be consistently expensive? What kinds of economies support the population growth that you're seeing? What kind of land constraints are in place? And I would say that, generally speaking, the two markets that, I think people have the most concern about would be Toronto and Vancouver. And as we dig into it in the book, both of those markets are markets where you would expect them to be expensive markets. They both tend to have high population growth, but most critically, they've got land constraints. So, the city can't just continue to build to the horizon, as, some other cities like, we talked about Las Vegas, and Phoenix, and Charlotte, and Atlanta, markets in the U.S. where there is no constraint and they just keep growing and growing. Those types of markets where you have this lack of constraints, you can just keep building houses no matter how many people show up, and that way the house price keeps coming down. But in markets like Toronto and Vancouver, house prices are going to be structurally high. And I would say that until after I published my book, I would have said that the price appreciation that you've seen in Toronto makes a lot of sense to me, in the sense that Toronto introduced a greenbelt in 2004, 2005. And that really structurally changed the market. So you went from a structurally, not inexpensive but not expensive market to one that was headed towards expensive. So there was a structural change which accounted for a lot of the price appreciation that you've seen. But in the last 12 months, and really the data that's been coming out in the last 3 or 4 months has shown that, for instance, Toronto detached house prices are up 33% year over year. And that's on the tail of last year, it was up 16%. And when you consider that, in the last 10 years, wages in Toronto are only up 12%. That's a real dislocation between the population's ability to afford these houses versus what the prices are moving into in terms of price to income and other affordability measures.
Yeah, no, for sure. I read some articles as well, or I looked at what's been going on in Toronto, and exactly what you said. Prices have been going up dramatically, but yet income for jobs have only increased a small portion. So there is a huge gap between the price of real estate and the ability to afford it. So yeah, absolutely. And I guess, what are your thoughts on purchasing real estate for the purpose of renting it out rather than living in it, though?
Yeah, I mean, I think real estate is, again, a beautifully simple and attractive investment, easy to understand, but it is something that you should know something about before you get into it. I think there's a lot of people, for instance, right now that are buying into the condo market in Toronto as an investment, and often what they're doing is buying at a price where the rent won't cover, the condo fees and, the cost of the mortgage, things like that. So they're running a loss. And generally speaking, I deal with thousands of large-scale institutional investors, pension funds and insurance companies, private families. And I would say that in the 15 years that I've been doing this, I have not met any institutional or professional real estate investors that are willing to take a carrying loss in hopes of prices going higher. I think the housing market in Toronto is quite expensive. Doesn't mean that it's going to come down, but when you move beyond, a market where the income from the house can't support the cost of the house or the condo, that is a much more challenging market to understand, a much more challenging market to invest in. In my day job, I look at real estate investment trusts. They generally, on average, offer a 6% yield. I mean, people debate whether those are good value, including myself. I mean, that's kind of my job. And I can tell you that, I think some of them are overvalued, some of them are undervalued. But generally speaking, I mean, the lowest yields that the REITs in Canada offer are somewhere between 3 and 4%, and we've got ones that are yielding closer to 10%. And some with 7 and 8% have quite sustainable yields. So when you compare that to buying a condo with a negative cash flow yield, or even a house with a negative cash flow yield, it's a little bit more challenging to get comfortable with.
Okay. What would you say is a good, or maybe, a good valuation in terms of the price to earnings? So, a certain condo might cost $1 million. In terms of the earnings that you can get through renting it out, what would be a good PE ratio or multiples earning, or I don't know exact term, but
yeah. So in the work that I do, we generally look at what are referred to as cap rates.
Okay, the cap rates. Okay.
So what that is you take the rent minus the expenses, not including any interest, but the rent that you're collecting minus the operating costs, so property taxes and condo fees or whatever other expenses you might have, and you compare that amount, the amount that you get in a 1-year period, to the value of the property or the purchase price of the property. And on that basis, generally speaking, the best quality real estate in Canada, the absolute best would be in the 3% range.
Wow.
The vast majority would be somewhere between 5 and 7%. And you can get some very high quality property at a 5% cap rate. Once you start moving north of 6 into 7, you're maybe looking at a little bit less prime locations, but there's still very good quality real estate that you can get a 6 and 7% cap rate on, and that those ranges change over time depending on where interest rates are. But today, a 6% cap rate is a pretty good cap rate.
When you refer to cap rate, that's just pay cash. If you were to pay all in cash, is that correct, or is that with a mortgage?
No, that's if you were to buy it all cash and say, this is the amount I bought the condo for $500,000 and it's yielding $25,000 after I pay all of my expenses, then that would be a 5% cap rate.
Okay.
But then you can get into levered yields, and that's really a lot of the appeal of real estate, is that generally very, very steady investment, very steady cash flow profile. So people do use a lot of leverage, and depending on how aggressive you want to get, if you buy something at a 5% cap rate and you use 90% leverage at 2%, you can get well into the double digits in terms of your levered yield on equity. But in order to make pricing comparable, we always use unlevered. So as if you bought all cash, and that's how you compare cap rates.
Okay, great. And so moving on to, I guess, more so of the book side, what was the process of writing your book like?
It was interesting. I mean, it sort of, as I described, sort of morphed over a number of years. I got involved with one publisher in 2012, 2013, and started moving towards the 55, 60,000 word level that they always tell you to sort of shoot for. And I did, and I got very close to that, and I was quite comfortable with that. And then life got busy. We had another baby in 2013, and there were some other things going on. So we ended up just sort of deciding that it was a good time to take a pause on the book. And then in the fall of 2015, our youngest was a little bit older and more manageable, so got back at it and got involved with a different publisher. And it was interesting because the original version of the book was a little bit different than the ultimate format. I mean, one of the things that you'll note is right near the end of the book, I think I say something like, I don't care if you rent or own, I don't care what your decisions are, I care that you educate yourself and make the best housing decisions for your life, for your happiness. And the original book was a little bit less skewed towards renting. It was I was describing it at lunch today. The original book was more of the first half was, here are all of the reasons that a home is a bad investment, and I fundamentally believe that on a pure investment basis, they're bad investments, as I'm sitting in the living room of the house that I own. But
I love it.
The second half of the original manuscript of the book was, okay, so now that we've established that it's a bad investment, here are the reasons that you'll still probably end up buying a house. And if you're going to buy a house, here's how to make it the least bad investment that you can. The appropriate way to look at leverage, the right way to pick one house versus another, depending on what your objectives are. Are you all about the accommodation experience? Are you mostly concerned with your financial returns? Do you have a big family, a small family, lots of friends? Do you like commuting? Do you not like commuting? How important is a backyard to you? All of those different things, and instead, I think partly reflecting the tone of the housing market. We worked together and got to a point. I worked with Dundurn Press. They're my publisher. They were very, very helpful. And we worked together and got to the point where we thought, perhaps, telling the side of renting was probably the most valuable thing that we could do for Canadians at this point in the cycle. And you mentioned earlier that there aren't a lot of people that that advocate for renting. One of the reasons is that there's not a lot of incentive for people to advocate for renting. Most of the people that give you advice that you should buy a home, as I discuss in detail in the book, have an incentive for you to buy a house, whereas telling someone to rent, generally, there's not a lot of money in that.
Yeah.
I've been very happy with the book, but I would say that the real drive and motivation for me was to help people, be better informed about their housing decisions and avoid bad decisions. And I don't mean specifically, buying a house. I don't think that's a bad decision, but it's a bad decision if you make a housing decision without being informed, and it ends up being a bad decision in retrospect. And I've known many people who ended in that situation.
Oh, yeah, I can, I think the thing with real estate is everyone thinks, oh, how hard can real estate be to understand? I've lived in a house, what's so hard or what's so difficult to understand about it? I think that there's that notion out there, oh yeah, I've lived in a house all my life. It's easy stuff. So, yeah.
It's easy for people to feel that way, particularly, homes are, 70% of Canadians own their own home, and generally speaking, that's the biggest investment they've ever made in their life. They also feel pretty proud of it because for the last 25 years, it's actually been what people believe to be a really good investment, which the math doesn't actually support that it was a great investment, which is a shocking exercise to go through, which we go through in the book.
Yeah.
Compound annual return from 1990 until 2015 on Canadian housing was only 3.7% per year.
Oof.
The TSX composite compounded at 8% over that same time frame. So $100 in housing over that 25-year period would be worth about $261. And if you put the same $100 into the stock market, it's worth $689. So it's actually a very good investment. But if that was the only investment that you made, and you did it on a levered basis, you probably think that it was a great investment and that you made a great investment, and that you should tell all of the people you know also make this great investment because it's well for you. And it's a very understandable sentiment. I mean, on the one hand, home ownership is a great forced savings program. So, part of the reason a lot of those people don't have other assets is because they haven't had the discipline to save outside of their mortgage, and that's a perfectly reasonable way to go about this.
Yeah, no, I agree with you 100%. And for yourself, how long did it take for you to write the book? I know you said you were on pause for a little while because of your child, and but in total, how long did it take you to write the book?
Yeah, I would say if I was to have spent like 40 hours a week on it, it probably only took me probably 3 months.
Okay, like wow, that's pretty quick.
For my job, I write a lot. I write hundreds of reports a year. It is a very different style of writing, and I really enjoyed, adopting a different style of writing. But and I do have a lot of background knowledge in real estate, so that helped. But when it came down to it, crunch time, it was probably only a couple of months of solid work.
Okay. All right, well, that's pretty quick, sooner than I expected. But again, you did all the research, you had all the knowledge, and then for you to just shoot it out, it was just very quick for you. Yeah.
Yeah, that made it a little bit easier, I think.
Yeah. And what would some tips be that you would give to other future aspiring authors?
I guess first and foremost, I would say if you want to write a book, pick a topic you're really passionate about. while it might have only taken me a couple of months, if I was doing it full time, I never was doing it full time. It was, evenings and weekends and, times when you would have rather been sleeping or hanging out with friends or doing anything. So if you want to actually get to the finish line, I think you really need to be passionate about the topic. I think I was very fortunate in that the topic that I'm very passionate about, being real estate and in particular housing, is a topic that many people are passionate about and many people are interested in, which, the book actually hit the Globe and Mail bestsellers list in Canada, which was a great surprise. I'm not sure that writing is a highly profitable full-time job, so having another job is usually a good being a writer, which also makes it that much more important that that you're passionate about whatever it is that you want to share with the world.
For sure. And knowing what you know now, if you could go back in time and tell your 20-year-old version of yourself 3 things, what would those 3 things be?
Wow. About housing or just in general?
In general.
In general, I would say, I've been very, very conservative in my financial affairs. I think I probably could have been a little bit more aggressive in the use of leverage, but that's, I think, not a broadly applicable message to be sending out. It's a tough question. I'm pretty passionate about what I do, and I enjoy it. The book, I think, having come out in 2016 was really good timing, so maybe I would have said, wait a little bit on some of the effort, because I could have waited longer. No, I'm pretty happy with how the book turned out, and, I probably could have been financially better off if I'd used more leverage, but...
Yeah, no, that's great. That pretty much shows that you have no regrets, and more or less the moves that you've made or the decisions you've made have ultimately led you to good ones. So that's great. Yeah, nice. And I guess before we finish up, for people who are watching this, where are some resources or what are some things that people can look into regarding home ownership or renting or home ownership? Yeah.
I think my book is a really great resource.
It is.
The Webster isn't just about renting. It's about, how you think about housing, talks about a lot of the myths. And I think a lot of those are the ones that I think when you start to see through some of the myths that are propagated about housing, you start to it becomes a lot easier to have an objective view. So, some of them I talk about in the book, like, the idea that, Brian, you tell me, what are the 2 best rooms in your house to spend renovation dollars on?
For right now?
Yeah, if you're going to renovate your house, where's the best bang for your buck?
I'd probably say the bathroom and possibly the kitchen.
Bathroom and the kitchen are the number 1 and number 2 answers, and it's interesting that that's what people say. But there's 2 things about that. One is usually it's the contractors that are telling you that, and it's really easy to spend $50,000 in a kitchen and $25,000 in a bathroom. Try doing that in your living room. It's almost impossible. So those are the 2 most expensive rooms in your house. And the people who are telling you that those are the best investment returns are your contractors and your real estate agent. But the other thing about that is they don't tell you that the returns are negative. So putting in a $50,000 kitchen is no different than buying a $50,000 sports car and parking it in your driveway. As soon as you buy it, it goes down in value, and then it goes down in value at a slower pace, but continues to go down in value pretty much forever, because the difference in value of a 30-year-old kitchen and a 40-year-old kitchen is pretty close to zero, whereas a brand new kitchen is worth a lot more than a 5-year-old kitchen, is worth a lot more than a 10-year-old kitchen. So, when they say that the best bang for your buck, the best return on your money is in your kitchen and your bathroom, they're still talking about losing money. No one will really tell you that. So there's all sorts of, neat little things. And, not just my book, but, other books on personal finance. One of my great inspirations was The Wealthy Barber. So I actually talked to David Chilton before I chose the title for my book, and he gave it the blessing, which was nice. He's a very nice man. And he wrote a great book that I think was, a foundational work in my, personal finance beliefs. Pay yourself first. Don't use a lot of particularly consumer debt. So, I think generally getting educated in personal finance, but also in the real estate market would be high on my recommendation list.
Great. And just to finish up, where can people connect with you if they are interested in connecting or finding you?
Well, if you Google my name, Alex Avery, I'm quite present on the web. I've got a LinkedIn profile. You can find me.
Okay, sure. All right. Well, for the audience members, I'll leave a link down below. And so that's where you can contact Alex if you have any questions. All right. Well, thank you very much, Alex. And we appreciate you having, I appreciate you having on, coming on to do the interview.
Thanks, Ryan. It was great chatting.
Yeah, for sure.